So welcome class. We are going to discuss this is ATD May 2021 paper, ATD May 2021 paper, question 4. Question 4 May 2021 ATD paper. So Rondo, Chilungu and Donde. I think this one was Bondo, Chilungu and Donde are in partnership sharing profits in the ratio 3 to 2 to 1. That is ratio 3 to 2 to 1. The total balance of the partnership as at 31st October 2020 was as follows. So those are the figure. Rondo, Chilungu and Donde. Rongo, Chilungu and Donde. You can see the figures. Allowance for doubtful debts, trade payables, trade receivables, bank balance, purchases, sales, rents and rates, motor vehicle expenses, office expenses, selling expenses, inventory, buildings at cost, motor vehicle at cost, accumulated depreciations, and then you have drawings again for Rondo, Chilungu and Donde. So I'll have to also make use of the original paper, because looks like this paper is a little bit affected here. You can see that total. Okay, let's proceed. Inventory as at 31st October 2020 was that for 50,000. And current assets, we have those ones. Rates prepaid on 31st October, we have that 30,000. On 31st October 2020, an amount of 26,625 was owing in respect of selling expenses. Then you have that debt of 7.5 to be written off. Allowance for doubtful debts is adjusted to 5% of outstanding debt as at 31st October 2020. Partnership agreement provides that Donde is to be allowed a salary of 90 million per annum. 10% of interest, 10% interest per annum is to be allowed on capital account balances. No interest is allowed on current accounts, and no interest is charged on drawings. So we are supposed to come up with a statement of profit or loss and appropriation account for the year ended at 1st October 2020. Then the partner's current accounts, and then the statement of financial position. So we'll start with the first one, statement of profit and loss and appropriation account for the year ended that. So straight to the question. This is Rondo, Ronde, Chilungu, and Ronde. I think it was Ronde. I hope I'm not getting Rondo, Chilungu, and Donde. Rongo, Chilungu, and Donde partnership. Then we say income statement. For the year ended, 31st October 2020. For the year ended 31st October 2020. So then, as usual, let's restrict our zeros like that, and like that. Then we have, now we'll start, of course, with the, we always start with the trading account, sales less cost of sales. So we go there, we go up, back to see if we have anything. Trial balance, there we go, allowance, trade payables, trade receivable, bank balance, purchases, we have purchases there, sales is there. Return inwards, return outwards, they are not there. Let's see if there's anything to affect the purchases or sales. Anything to affect purchases or sales. Can see closing inventory. Looks like it's a straightforward question. So sales 2250. And we are restricting our zero. Let's just check. They have also restricted their zero. So it means the figures are in billions. So sales 2250, like that. Then we go to cost of sales. Under cost of sales, we have opening stock. Now opening stock, let's go back to the question. Pick the opening stock. Opening stock is here, 300,000. So opening stock 300,000. Because this is the cost of sales we are working, it will be on the inner column. And then we add the purchases, and we'll have to confirm if the purchases has any workings associated with it. So purchases 1275, anything that can have an effect on purchases, nothing. So purchases is 1275,000. So simply come here and say 1275,000. And of course we less the closing stock. Closing stock is normally under the additional information. So 450,000. Remember those zeros, now we have to restrict them. So get the total. This will be 300 plus 1275 minus 450. That gives us 1125,000. So if we less this from that, you can see clearly the answer is 1125, but let's just, for the sake of it, confirm 1125,000. This becomes our net profit. This becomes our net profit. Just a minute. The computer is processing something. So some few minutes. Okay. So this becomes our net profit. Net profit. So then we proceed with the journey. Find out if we have any incomes and gains. Any incomes, any gains. Maybe let's just check this to see if it will qualify as a gain. Allowance for doubtful debts is to be adjusted at 5% of outstanding debtors. So 5% of outstanding debtors, 5% of 345,000. 5% of 345,000. This gives us 17 to 50. 17 to 50. What was the original allowance for bad and doubtful debts? 15,000. And now it's 17 to 50. So this is an increase. So it doesn't qualify for income and gains. It is actually an expense. It will come under expenses and losses. So that means there's no income and gain. Let's move to expenses and losses. We start with this one. Allowance, increase in allowance for doubtful debts. We've already confirmed. The difference is 2,250. So increase in allowance for doubtful debts. The increase is 2,250. Increase in allowance for bad and doubtful debts. So 2,250, and this is simply the 17,250. 17,250 minus 15,000, and the 17,250 is 0.5, 5% of the trade receivables which we have seen. So this minus this, 2250. And the next one is rent and rates, 60,000. Do you have any additional information on rent and rates? Yes, rates prepaid 30,000. Any other? None. So rent and rates 60,000, and then prepaid is 30,000. So you simply come here and say rent and rates. Rent and rates. Might want to use the innermost column this one. So this will be 60,000 less prepaid rent, prepaid rates. That was 30,000. So this gives us 30,000 like that. And next, motor vehicle expenses, 20,000. Do you have any additional information on motor vehicle expenses? None. So motor vehicle expenses, 20,000. Motor vehicle expenses, 20,000. Motor vehicle expenses, 20,000. Next, office expenses, 40,000. Anything on office expenses? None. So office expenses, 40,000. Office expenses, 40,000. Next, selling expenses, 210,000. And there's still an amount here owing of 26,625 in respect of selling expenses. So selling expenses to 10,000. Selling expenses 210,000. Then owing selling expenses, this is accrued, is 26,625 if I'm not wrong. 26,625 if I'm not wrong. 26,625, yeah. And this was 210,000. So when we add this one you add because it was owing, it is part of the expenditures of this year. So this will give us 236,625. So we go back to pick more. Inventory, building at cost, motor vehicle at cost, accumulated depreciation, and drawing. So there's nothing there. Move on to additional information and current assets are to be depreciated on cost at the following rates. Building 5% per annum. So building 5% and it's on cost. So building 5% of 900,000, that should be 45,000 or 4,500. Let's just see, 5% is 0.05 times 900,000. 900,000. What do we get? 45,000. So 45,000. So depreciation on buildings, 45,000. Depreciation. Can have all the two depreciation. So building 45,000. The other depreciation is on hopefully motor vehicle. So motor vehicle 20% per annum. Motor vehicle at cost is 300,000. 20% of 300,000. That's what we are talking about here. So 0.2 times 300,000. This gives us 60,000. So motor vehicle 60,000. Buildings and motor vehicle 60,000. So this gives us 105,000 as depreciation. Then we go back to the third item, rates prepaid. I think we've captured that one. Rates prepaid. Confirmation is always good, so let's just check. Can always go back and check if we had captured it. So rates prepaid, I think it's very clear we captured it. This one has been captured. A debt of 7,000 is to be written off. 7,500 is to be written off. So we talk about bad debt, 7,500. And this one will also have the effect of reducing our trade receivables, because they are proposing to write it off now. So 7,500. Remember the restricted zeros. Then allowance, I think we are done with that one. Partnership agreement 90, that one is not, those ones will feature in the appropriation. So I think we are done with the expenses. We need, I think we have captured all the expenses. So let's go to the calculator see, add all these features here. 2250 plus 30,000 plus 60,000. I've added 20 plus 40 plus 236, 625. 236, 625 plus 105,000 plus 75,000, 7,500, not 1,000. That gives us 441, 375, 375, and we less this from that. So 441, 375 minus 1125,000. This gives us 683, 625, 683, 625, and that becomes our net profit. Net profit is 683, 625, 683, 625. So, having reached there, the next thing is to go to the appropriation account. And appropriation, we have this salary of 90,000 per annum. So salary is part of the appropriation account. So salary to Donde, that is 90,000. Then we have commission. I think we have commission on capital. So we have partner Ronde, partner Chilungu, and partner Donde. And let's see, I think it was here. 10% interest per annum is to be allowed on capital accounts. So 10% of capital accounts. This is 27,000, 18,000, and 9,000. Those are the 10%. So 27,000, 27,000, 18,000, and 9,000. If we add this, we are going to get 45 plus 9. This is 54,000. So 54,000. So 54 plus 90, we have 144,000. And this we less from the 683, 625. So 683, 625 plus 144,000. What we get is 539, 625. 539, 625. So this is the amount that these partners are going to share, profit share, because we don't have any other thing. Profit share, so RCD, and they are to share in the ratio 3 to 2 to 1. So then we'll simply take 3 over 6 of that amount. 3 over 6 of that amount. That is basically half. So divide by 2. This is divided by 2 is half of that. What we get is 269, 812, 269, 812.5. We are doing well. Then the next one, now this one is 2, we'll enjoy 2 over 6, 2 divided by 6 times 539, 625. This gives us 179, 875, 179, 875. We are simply getting the ratios. This one is supposed to get 3 over 6 of this figure. This one 2 over 6 of this figure. And this one 1 over 6 of this figure. And this has been captured in the question. Here we go, 3 to 1. The ratio is 3 to 1. You can check in the right question that we have, 3 to 1. That is the ratio that they are going to use to share the profits amongst themselves. So lastly, we have 539, 625, 539, 625 divided by 6. What do we have here? 89, 89, 9, 89, 9, 37.5. 937.5. So when we add all these three, we should be able to get the same figure, which is 539,625, which will now give us 0 balance here. So if you add these three, you should be able to get 539,625, which will be able to give us a zero balance. That means that the partners will have shared the profit and loss. The entire amount of money that they got as profit will have been distributed to them. That brings us the end of the first part of this question. Now we go to the second part of the question, where we are supposed to come up with the partners' current accounts as at 31st October 2020. Partners' current account as at 31st October 2020. Allow me to do it here. So this will be our number 2. Partners' current account. So there we go. Partners' current account. How many partners do we have? We have 3 partners, so our columns have to be 3. Don't mind the lines. Don't mind the lines. Don't mind the lines, please. Don't mind the lines. So this is a debit side, this is credit side, and then you call this partners current accounts. Partners current accounts. So you have partner R, partner C, and partner D. Partner R, partner C, and partner D. Of course, here we have the details. So we'll start with the balance brought forward for these partners, and we are talking about current accounts. So Rondo is 10.5. Chilungu, unfortunately, it's a debit balance. Donde is 4.5. So 10.5 and 4.5. We start from there. 10.5 and 4.5. Then we'll also have another balance brought forward of 4.5 for Chilundu. Like that. So we've interpreted that information. Now let's move on. Now we have interest on capital. Anything that adds to their wealth is credited. Anything that adds to the partner's wealth is credited. So interest on capital, these figures are just here. Don't need to go far. 27, 18, and 9. 27, 18, and 9. So 27,000, 18,000, and 9,000. Then we have profit share. Profit share, we have the figures here clearly laid out for us. We've already worked them out. 269, 812.5, 269, 812.5, 269, 812.5, and then 269, 812.5, 179, 875, 179, 875, 179, 875, and then lastly we have 899, 89, 937.5, 89, 937.5, 89, 937.5. Yeah, there we go. So those are the profit share. Then you might want to check if there's anything else for these guys. No interest, 10%. We've captured that. Salary. There's a salary of 90,000. Salary affects the partner's current accounts. And this salary was for who? For Donde. So Donde, 90,000. Remember the restricted zeros. 90,000. Then I think there was drawings. Yeah, drawings 60, 45, 45. So this one has the effect of reducing their balances. Whatever increases their wealth in the business, you credit. What reduces, you debit. So 60,000, 45,000, and 45,000. So what do we have? Do we have any other thing? Nothing else. Current. We are not capturing. We are not dealing with the capital account. So let's close the account. Looks like you are done. So we close the account. We close the account. So then let's get the calculator. 89,937.5. We'll start from there. Plus 90,000. Plus 90,000. Plus 9,000. Plus 45. So this gives us 193,437. 193,437.5. So that should be the figure also this side, 193,437.5 less 45,000. So less, sorry for that, less 45,000. That gives us 148,437.5. 148,437.5. 148,437.5. And let's look at the second one, get the total. So the second one total will be 179,875, 179,875 plus 18,000 plus 18,000. That gives us 197,875. 197,875. So 197,875 minus, this is 45,000 minus 45,000 minus 4,500. That gives us 148,375. 148,375. How come these figures are similar? 197,875. Let me just repeat. We are taking this, the side with the highest figure will be the balancing figure, so we can foresee credit side and the debit side. Credit side 197,875. Of course, debit side can get to that level. Debit side is 4,500. This one plus 45,000. This one we get 49 minus the total we have here, the higher side, 197,875. That is the balancing figure. We get 148,375, what we have here. So then let's go to the third one, 10,5. This one plus 27,000 plus 269, 812.5. 812.5. That gives us 307, 312.5. 307, 312.5. 307, 312.5 minus 60,000. Minus 60,000. This is 247, 312.5. 247, 312.5. So this becomes our balance carried down, 247, 312.5. So these are partners' current accounts. This is our partners' current account. We have already prepared it. It's our partners' current account. So that's how we go about it. Anything that increases the partners value the business, we credit. Anything that reduces, we debit. So let's go to the third part and the last one, statement of financial position as at 31st October. Statement of financial position. So we'll start it from here. This is again Ronde. I don't know if I've gotten the name right. Chilungu and Donde. Statement of financial position. Statement of financial position as at 30th, is it 30th October? As at 31st October 2020. At 1st October 2020. As at 31st October 2020. So like that. And of course, we always start with the non-current assets unless otherwise. So we'll go that direction. So our non-current assets, I know we have buildings, we have motor vehicle. I saw them, buildings and motor vehicle. Let's go with the totals. Let's go with the totals. So buildings 900, motor vehicle 300. Buildings 900 at cost. We are picking at cost. Buildings 900, motor vehicle 300. So buildings 900,000. Motor vehicle, 300,000. And these are their book values. Then you have accumulated depreciation, and you have the net book values. So let's get the accumulated depreciation. Accumulated depreciation will take what the figure, the accumulated depreciation so far for buildings is 180, for motor vehicle 120. Then we add the depreciations for this particular year. So 180 and 120. We simply come here. For buildings is 180,000 plus depreciation for this year 45. So 180 plus 45,000, that gives you 225,000. So for buildings 225,000. For motor vehicle it was 120,000 plus depreciation for this year 120,000 plus 60. That makes it, initially it was 120. Then what we have as depreciation for this year is 60,000. That makes it 180,000. So 180,000. So 900 minus 225. 900 minus 225. That is the accumulated depreciation. We have 675,000. And then this side, 300 minus 180,000, we have 120,000. And if we don't have any other asset, then you simply add to get the total non-current assets. Add the two, you get the total non-current assets, and then we move to current assets, just like that. So let's confirm if we indeed we don't have any other asset. Yeah, we only have motor vehicle and buildings. There's no any other. So let's go to current assets. We have trade receivables 345,000. Remember, for trade receivables there was a figure to be written off. A date of 7/5 is to be written off. So it has not yet been written off. We want to write it off. So it will reduce the datas by 7/5. So trade receivables of 345,000 minus 7/5. So we'll have trade receivables here. Trade receivables. Its figure is 345,000. Let's have it here, 345,000. Bad debts, we want to less the bad debts which are to be written off. So 7/5. So this will give us a figure of 345,000. 345,000 minus 7/5. That gives us 337,500. 337,500. Good. Now let's proceed. Where are we? Bank balance, that's 7,500. Bank balance, that's 7,500. So we pick it as it is. And let's see if we'll have any other issue coming up. Bank balance, that's 7,500. Looking around for any other current assets. So inventory for 50,000. Closing inventory is a current asset. So inventory for 50,000. 450,000 like that. And go back. Prepaid rates 30,000. Prepaid rate we paid in advance, so that means our asset until the time when we'll utilize it. Prepaid rates 30,000. It's an asset, so we need to capture it as that, as an asset. Then we continue. I think we've captured everything. We have captured everything in terms of current assets. So let's get the totals. Let's get the totals. Let's get the totals for the current assets. So the totals will be 337,500 plus 37,500. What a coincidence. Plus 450,000. Sorry. 450,000. Hello. Okay, so plus 450,000 plus 30,000. That gives us 855,000. 855,000. So we can add now this to this. This is what were we doing? Yeah, 855,000. Now that one will come there. Then we go to current liabilities. Current liabilities will start again with the, I saw trade payables somewhere. So trade payables, 525,000. Trade payables, 525,000. You have these papers. You can always click and download them. Trade payables, 525,000, so that you don't have to rush all the way up there the way I'm doing. Trade payables, 525,000. So we have provision for doubtful debts. Of course, it was increased to 17 to 50. So we have to pick that figure as it is. Provision for doubtful debts. Provision for doubtful debts. How much? 17 to 50. Remember, that is 5% of the debtors. 5% of the debtors. Then 17 to 50. Then we have, don't think if we have any other thing. I have this amount owing. This was selling expenses owing, 26,625. Selling expenses owing, outstanding. This is accrued. Selling expenses, 26,625. So this will give us 525,000 plus 17 to 50 plus 26,625. This gives us 568,875. 568,875. So we less this from that. We are almost coming to an end. So this minus 855,000 minus 795,000. We are simply getting the total, 1081,125. 1081,125. So just get this 795,000 plus 855 minus 568. You'll get 1081,125. This becomes our net capital employed. Net capital employed. How have we gotten that? Total non-current assets plus current assets minus current liabilities to get net capital employed. Financed by, this is going to be quite straightforward because you already have everything. You have R, Chilungu, and Donde. That is capital account. Then we also have their current accounts. So capital account and current account. So R, capital account, I think it was 270, 180, and 90. 270, 180, and 90. It's quite a long distance. So 270,000, 180,000, and 90,000. If we add this, we are going to get 540,000. Then for current accounts, we also have RCD. So this is only pick from the current accounts. Remember, we have our balances here. Hope they are correct. So RCD again, 247, 312.5. 247, 312.5. So 247, 312.5. That is their current standing in the business. 247, 312.5. That's balances. 148, 375. 148, 375. 148, 375. 148, 375. And lastly, if we get any figure wrong, it means it's not going to balance. 193, 437.5. 193, 437.5. 193, 437.5. 193, 437.5. Now, any figure, if we might have done anything wrongly here, it means we'll be doomed. 247, but thank God accounts, they mark entries also. In fact, they mark entries. So, all will not be lost. All will not be lost. All will not be lost. So, meanwhile, let's see if it will balance. We're almost coming to an end. So, add all those three. 589, 125. So, then add these two. That is 540 plus 540,000. And all indications are showing that our figures are not balancing. So 1129, 125. 1129, 125. There's no harm. Let's see where we might have gone. So let's find out where there's a mistake. You can see clearly the figures have not balanced. So I think let's just start with these current accounts. 247, 312.5. 247, 312.5. We confirm that figure, yes. 148, 375. 148, 437. 148, 375. Oh, you can see we've already seen the difference, the mistake. This figure, we have captured this figure wrongly. We are not supposed to get the balancing figure. This figure has been captured wrongly. So let's just go away with this. Sorry for that. But it's a lesson anyway. So you need not to be sorry, because you need to learn also from these mistakes so that you don't do mistakes. You can see for D we captured the wrong figure. D, the figure that we are supposed to capture for D is 148, 437.5. 148, 437.5. How come they are the same? 437.5. Well, they are not the same. 148, 437.5. Let's just confirm that's a complex figure. 148, 437.5. Good. 148, 437.5. So, having done that, maybe let's see again if the totals will now agree. 247. So normally, if you have done everything right, the problem will just be in this simple, and that explains why you need to be extra cautious when you are working out these things. You need to have full concentration. Otherwise, any small mistake can put you out. 437.5. You've seen how we've ended. So 544, 125 plus this, plus the 540, we see if it will balance. 540,000. That gives us 1084, 125. And this side you have 1081, 125. Still not balancing. So it means you still have some mistake. And the difference is basically 3,000. So maybe we check our figures, and I think our computation just here. Somehow my feelings are just on this. So let's just check the whole of this partner's current accounts. Balance brought forward to 10,54545. Let's just look at it. If it doesn't agree, then we can move to something else. Current accounts 10,54575. 10,54575. Chilungu is 75. Let's see. 10,54575. Now, notice again another mistake that we've done. Instead of 75, we had 45, and we are lucky because we are spotting these mistakes. We are spotting these mistakes very early. Otherwise, you can spend the whole 1 hour just trying to locate this mistake. So if that is 75 and it's in the question, we had just captured it wrongly. I wish you were in my class. You could have raised your hand and told me, no, you are capturing this figure wrongly. And now look, I'm all alone, and these are some of the mistakes that you will make when you are all alone with the paper. So you need to be very, very, very cautious. Chilungu is 75. We had captured this. We had captured it at as 45. I don't know from where. But now that we've discovered that, let's do again. This is we get the totals again here. So this 175, just to be sure. Actually, we need by now, it's straightforward because it was not balancing by 3,000, and we've already found the reason. Plus 18,000. That gives us 197,875, which is correct. Minus now this, minus 5,000, minus 75. This gives us 145,375. So what figure is supposed to have here? 145,375. Sorry for that. Hope it doesn't mess up everything that we've toiled for. Let's give it time. Hope it doesn't mess it. Good. So 148,375. Now it's 145,375. So we simply come here and replace this figure with 145,375. Where was it? It's not going to affect any other figure. 145,375. It will only affect here. So 145,375. And I must say that we have been lucky because 145,375 plus 247,312.5 plus 148,437.5 is equal to 541,125. Now this one looks like it's 541,125. So when you add the two, let's see, 541 plus 540,000, we get 1081,125. So there we go, 1081,125. Now this becomes our net capital employed. It has been a long one, but thank God we've come to the very end and it has balanced. Thank you. This question is supposed to take you 30 minutes. It's good you've done. We've gone through the whole of it. You've seen how you can make mistakes. It's also part of learning. That's how accountants make mistakes. Be extra cautious. Thank you so much. Let's meet in the next question.